channel, John Domenico.
We're ready to educate people.
It's about the good, the bad, and the ugly. No bullshit. The real deal.
And welcome to episode 3 of The Real Deal. My name is Naz.
And I'm Nick.
And who do we have with us today, Nick?
Today we have a very special guest, Gary Fooks from 812 Mortgages. He is the CEO. And today the topic of conversation is mortgages. So welcome, Gary. Thanks for coming on.
Pleasure. Very excited to be here with you guys.
We're lucky and excited to have you. Very, very happy. So, Gary, we're just going to kind of jump into it.
Sure.
How long you been in the industry?
Yeah, so I started in the industry in early 2016.
Very nice. Very nice. And why mortgages? Why, like I said, why not real estate? Why not anything else?
Yeah, well, I don't want to compete with Nick, right? So what's the next best option to be in this industry? Let's go with mortgages. No, I actually came across the mortgage industry in late 2015 doing a mortgage. Realized the industry is very antiquated. Everybody's running around still doing their business through manila folders, a lot of paperwork. Things take a long time.
Right.
And, using my background in building large sales and service organizations globally, doing it through technology, I saw an opportunity to disrupt the space and really help Canadian families with, for most of them, this is their biggest financial asset.
Absolutely.
Right? So I had jumped in and, got my license and actually started doing mortgages myself in early 2016. And, here we are 7 years later. We're across Canada. We have a massive team and we're one of the fastest growing mortgage brokerages using technology in Canada today.
That's huge. That's what I would call a success bomb.
Yeah, 100%.
That's huge. Good for you, man.
A nationwide
Congratulations.
mortgage company.
Yeah.
Large.
So I guess for our viewers and I guess our listeners today, let's for those people out there who first-time home buyers or people who are looking to purchase a home and they don't really understand what a mortgage is. Let's start there. What exactly is a mortgage for viewers who don't really understand what that aspect is?
Yeah, no, that's a great question. Great question. So a mortgage is when you're borrowing money that is being secured against the home that you're borrowing the money against or you're buying, right? So typically a bank or a lender is lending you money. They're securing the home to make sure that money gets paid back. And generally what happens is you have a term and you have what's called amortization. So the term is kind of like the contract, right? It's like when you lease a car, you say, hey, I'm going to lease it for 4 years, and then you're going to pay that car in 4 years. So that's the term of the mortgage, right? The amortization is usually longer, and that's the amount of time it's going to actually take you to pay off your mortgage. So if you start with a mortgage payment, hypothetical, let's say you're paying $2,000 a month, that means, and your amortization is 25 years. So if you pay $2,000 a month for 25 years, your mortgage will get paid off. Now in Canada, unlike the US, we have terms. So unlike the US, you can also have a 30-year or 25-year term. That means that's the length of the contract.
Just keep your payment the same for the contract.
Yeah.
That's excellent.
Whereas here, we're a little more conservative in Canada, so terms tend to be much less.
Okay.
The most popular is usually a 5-year term. That's the one that typically everybody hears about.
Yes.
We actually do have a 7 and a 10. Less than 1% of the population, it's even probably less than 1/10 of 1% of the population take longer terms. Wow. So 5 is the most popular, and then it usually goes down from there.
If I'm in a 10-year term, are people afraid because they can't get out of it?
It's not that you can't get out of it. You can always, for the most part, get out of a mortgage, but there's a penalty.
Right.
It's really, I wouldn't even say it's a disadvantage. Just the longer the term, when you go past 5 years, the interest rates go up.
Oh,
so people are, very much like to take advantage of lower interest rates because the lower your rate, the lower your mortgage payment is.
Lower term.
So they're a little skeptical to kind of bet on the long game. Right. And if you've been in the mortgage industry for the past, 10 plus years, you've really benefited from extremely low, historically low mortgage rates. Yeah. So people are typically conditioned to take shorter terms as a result.
Okay. Interesting.
And in terms of interest rate or average interest rate in today's sort of mortgage world, what's that look like?
Yeah, so if you asked me this question 3 days ago, the answer would be different. Yeah. As you know, the Bank of Canada recently increased rates by 1/4 point. So today, in today's world, the prime rate is 2.7%.
Okay.
So if you're doing a variable mortgage, right, this means that your rate will change
Adjust.
depending on the Bank of Canada's rate. It's usually prime minus for
Okay.
a traditional bank mortgage, so prime -1, for example. So you could walk into a bank typically and get 1.7% on a 5-year variable. And then your fixed rates, will vary a little bit. They could be under 3%, a little bit above 3%. The reason I say that they vary, it's important to note, especially for people that are getting into getting their first mortgage or just got a mortgage, is that the way the mortgage rates have been priced in the market today are very different. There's a lot more rules.
Right.
5 years ago, realtors like Nick could call me and say, hey, what's your best 5-year fix? And as soon as he says best, I can give you an answer. Today, it's different. When you ask me that question today, or when our realtor partners calls and say, what's your best 5-year rate? I have to follow that with, are you buying or refinancing? If you're buying, are you putting less than 20% down payment or more? If it's more, is it 20, 25, 30, 30? So it's actually a matrix. So based on that matrix is where you will get your answer.
So the more we put down, obviously, is it to lower the interest rate? Is that the way it typically works?
So ironically, no.
That's what I thought.
Ironically,
That's
no.
what I thought. So the sweet spot is 20.
Well, the sweet spot, it depends on how you analyze what you say sweet spot. So
Right.
let me give you an example. So when you're putting less than 20% down to buy a home, that mortgage is insured. That means one of the 3 main insurers in Canada, which is CMHC, is the most popular.
Right.
Yeah.
That's like everybody talking about Tim Hortons. There's also Canada Guarantee and Genworth. One of the 3 insurers has to insure your mortgage.
Yeah.
That's going to make sure that the banks that's giving you the money
Get
is
their
not going to
money.
lose money on you.
Yeah.
Right? So you actually pay for that insurance. It actually gets added into your mortgage. So hypothetical, you're putting 5% down, 4% of your mortgage amount gets added back into your mortgage.
Jeez Louise.
That gets amortized and
Wow,
paid
wow,
back
wow.
over 25 years.
That's a lot.
right? So because the lender can't lose, you get the best rates in the market,
Okay.
right? Now, anything at 20 or above, your rates are very attractive as well.
Mm-hmm.
But the lowest rates are actually for the mortgages that are insured because,
They
again,
want people to pay them too, right?
there's no chance of losing. Exactly.
So so Gary, we have a board. I bring this up everything because I know the camera can see me looking up. So we look through our board and it kind of gives us an idea of where and what we want to ask. And the next question for me is, how do you get a mortgage? Like, do I have to go to a bank to get a mortgage?
You don't. That's the
Okay.
simple answer. I'm a huge proponent of people speaking with a mortgage broker, right?
Yeah, me too.
And the reason for that is, mortgage brokers have access to, especially ones that are successful in the business, have access to almost every mortgage product that exists in Canada.
Right.
And the banks have only their products, right?
Yes.
So I think choice is important especially in today's
Yep.
world. There's a lot of options available out there. Banks are great. I'm not saying they're bad.
Mm-hmm.
I'm just saying that, a mortgage broker can theoretically take you to one of the, 2 of the 5 big banks through the broker channel. But then there's many other products where you can get a better mortgage product, a better rate many times as
Yes.
well. So my advice is speak to the broker first. The banks will tell you don't speak to the broker because they don't want to lose the business. I will never tell a client don't speak to your bank. I encourage you to speak to your bank, but I think you should always speak to the broker first.
It's also a little more of a downhill battle for you, right? So if they speak to their bank, your rates are better anyway. So
Not
it
always.
doesn't make a difference.
Not always. Sometimes.
Are they?
Yeah,
Really?
no. Sometimes
Oh,
they're
really?
not, depending on the nature of the transaction and where you are in your mortgage life cycle. It may not make sense for you to leave the bank, right? So,
Oh, that's true. I
the
get
way
that,
we
yeah.
take a holistic approach.
That's good.
If
Yeah.
I can't save you money,
Then
not just
there's
on the
not a
rate,
point.
but the cost of actually doing the mortgage, then I would tell you to stay at the bank. And I've told many clients to stay at the bank. For us, it's about the relationship, not about the transaction.
That's great. See that, folks? Good guy, Gary.
But I think even when people go get a mortgage or try to get a mortgage, they don't. I don't think they look at options. I think they're so
Yeah.
instilled that I
think
got to go to
so
the
too.
bank. The bank's my only option, right?
That's
Nick,
so true.
you're right, and I can tell you why that is. It's no different than if you were coming over and I asked you to grab me a coffee, you'd probably think Tim Hortons or Starbucks.
It's a branding,
right? And
Yeah.
99% that's what you were thinking right now, even though
Yeah.
there's 100 different other coffee places. And look, I drink Starbucks, so kudos to them for doing such a great job on conditioning us to choose them when we get our next coffee.
Yeah.
The banks do the exact same thing.
Right.
They spend hundreds of millions of dollars a year advertising.
Right.
And we believe those are the only options. There's other lenders that are like banks that don't advertise, only get their business through the brokers like myself that do provide very competitive rates. So,
Yeah, and I mean, the banks have had the last, forever.
Yeah.
To condition us that this is
So
where
would you
you're
say there's
coming
an
to your
advantage
business.
to using a mortgage broker at the end of the day?
I think
I think so.
it's a must. I think if you have the
think
right
so, too.
broker who does the volumes, has the relationships, has access to all the products, there's over 65 bank type lenders with over 5,000 different products in the industry today.
Yeah, you're hurting yourself, really.
Absolutely.
Yeah, you're at a disadvantage, right, when you don't have all your options. So, yeah, absolutely. So not everybody can get a mortgage, obviously, right? You can't
Correct.
just walk into to a mortgage broker or a bank and say, "Hey,
Yep.
I'm good to go."
Yep.
Right. So, typically, what's the least amount somebody can do to qualify for a mortgage? Besides, I know mortgage amount is going to make a difference, right? So, the average mortgage of a first-time home buyer, let's say, that you deal with, what's the typical minimum that they would need?
So the rules in Canada today are you can buy for as little as 5% down.
Right.
Now, just to make sure that everybody understands what that means, the rule is up to the first 500,000, you can put up to 5% down.
Right.
The next 500,000 up to $1 million, it's 10%. So, for example, if you're buying a house for $700,000,
You can put 10%.
you would put $45,000 as a down payment. So it'd be 25,000 on the first 500,000 and 20 on the next 200,000 to get to your 7. So it's 5 on the first 5, 10 on the next 5.
Got it.
The second you get to $1 million, it's automatically 20%. Okay, so those are the down payment rules. Now you have to qualify based on income, credit, liabilities, other obligations that you have. But high level, those are the numbers.
What's the
didn't know
typical
that.
process, Gary, for someone like, we come to a mortgage broker like yourself. What's that process look like from start to finish?
Yeah, it's a very smooth process.
Yeah.
Unlike the industry, especially like when you go to the bank,
Yeah.
it's a very long, arduous process, almost like a black hole. Because of our experience in the business, because of the volumes we do, we're very quick, right?
Yeah.
So we understand very quickly. Like I could speak to you in 30 seconds and tell you what you qualify for or less. The banks try to promote that. Unfortunately, it's not accurate. But high level, we're looking for your credit and your income, right? Once we know that what your down payment is available, then it's all about credit and income. How much do you get paid and how do you earn that money? Because that's a big one, right?
Right.
People say, well, I make $70,000. They go to the bank and they say, okay, you're qualified for, let's say, $350,000. But it depends on how you make that $70,000. Not everybody who makes $70,000 would actually qualify for the same mortgage amount, even though they all make $70,000.
Like I know it's there's a caveat with realtors because our mortgage our income fluctuates.
Yes.
Typically, right?
Yeah. So that's a good example. So if your income is guaranteed, so guaranteed income would mean I'm a salaried employee or I get a guaranteed number of hours per week, then you can use that income even if it's your first day on the job, as long as you're not on probation.
Right.
Right. Any income high level that fluctuates, so if you think of people that are full-time, not guaranteed hours, part-time, seasonal, contract workers, especially now through COVID, we're getting a lot of gig economy employees, right?
Okay.
So anytime your income fluctuates to qualify at a bank, you typically need 2 years of history.
Okay.
Right? So you take someone who's a salaried employee and started today and they're not on probation and they make $100,000, you can give them $100,000 of income.
Right.
You take someone that's, started a new job and they're on contract and they're making $150,000 a year and they're only their first year in, you can't use any of their income to qualify at a traditional bank.
Wow.
Right? Now there are other lenders where you can qualify, but there's different rules, different rates, et cetera.
Okay.
Sounds complex.
No,
Yeah,
it's
That's
it
why the
makes
more
sense.
reason why you got to kind of go to someone who knows what they're
Who
doing.
knows what they're doing?
Yeah.
And for people who don't really go to somebody who knows what they're doing, right? Somebody who's seasoned, somebody who's seen it all. You're messing with a lot of money here, right? We're not playing like with a little bit of money. This is big high roller money. So,
Yeah, listen,
you know.
for most people, for most Canadian families, their home is their biggest
Absolutely.
financial asset.
Absolutely.
And it's really important, I can't stress this enough, that you want to go to somebody that you trust
Absolutely.
with your biggest financial asset.
100%.
Yeah.
100%. And just another question on what you were talking about with income wise, for people who are like us, for example, if your income increases every year, how do you give them 2 years of income if it's not stabilized?
Yeah, so the rule of thumb is you use an average as
Okay.
long as the most recent year is the same or higher than the previous year. So high level, somebody earns $50,000 this year or last year and $100,000 this year, they would get a $75,000 average, right?
Okay.
But if it was the reverse, if they earned $100,000 last year
And 50 this
and
year,
50 this year,
they don't qualify.
it would just be 50. They would take the lower amount.
Okay, got it.
Right?
Because it's being conservative. They want to keep
Exactly.
you protected, right?
Exactly.
They don't want to over mortgage
It's
you.
the average unless you're declining in income.
So There's fears that I think attached to mortgages. I think people are afraid to get a mortgage. You know, how many people we speak to that say, "Do you want to speak to a lender?" Oh, not right now, because it means they're committed, right? It means they're committed to whatever it is they're doing. There's also a stigma, I feel, more so the older generations than us, where you have to pay off your mortgage.
Yeah.
Right?
We get that a lot.
Right?
We get
Which
a lot.
I think is, I'm not for paying off your mortgage.
No, neither am I, actually.
So what do you think about people who have fears about getting mortgages, or what do you have to say to them? And what do you think about people who think paying off the mortgage is the biggest thing you can do in life, the biggest success?
Yeah, I don't think you need to be scared of getting a mortgage, especially if you want to build your wealth. I
Yes.
mean, you can only make so much money, working 9 to 5. I think a lot of Canadians have built their wealth through real estate. I'm a huge proponent of real estate, especially long term. So if you plan to be in the real estate long term, I think you'll always come out on top, especially in Canada. So don't be scared. I think it's like anything else. When you're getting into something new that has such a big impact on your finances, the more reason to really speak to very well educated people in the business. So it's really fear of the unknown. So
Right.
you get past the unknown,
Right.
that fear should not be there. I think it's always important to make decisions from an educated perspective, and then you can make the right decisions. As far as the idea of paying off your mortgage, I mean, the reason a lot of our parents and grandparents have that mentality is because when they came to Canada, in the 80s and the 70s, mortgage rates were not 2% or 3%.
No,
they were 15, 17, 20%.
Wow.
So yeah, at 20%,
I want to pay it off.
you should be paying off your mortgage, right?
Yeah, for sure.
The reason I'm not big on paying it off in today's world is because, at 2 or 3%, if you use your money wisely, there's a lot of investment vehicles out there that will give you a bigger return than spending 2 or 3%. So I look at the net cost of money.
Okay.
So if I can put my money into an investment vehicle, relatively secure investment vehicle where I'm earning more than what my mortgage interest rate is, then I'd rather put more of my money in there and
Right.
use that to pay down my mortgage as I make money in my investments.
So it'd be like investing in first mortgages.
there's-
getting
there's-
7%, for example.
Yeah, I mean, there's so many different, based on your risk tolerance and
Totally.
risk profile. But yeah, there's mutual funds, private mortgage
So
lending, et cetera.
essentially, if I have a 2% mortgage interest rate, as long as I'm making 5 to 7 to 10%, you would do it
4.
even for 3, really?
I mean,
okay.
yeah, again,
Okay.
sure. Otherwise, if you think about it, you're just spending bad money.
Right.
Which
Like
you
you said,
should.
I think it's your threshold for risk,
Yeah.
how much you're willing to kind of
Correct.
to be there.
And how many different kinds of mortgages are there, Gary?
There's a lot. There's a lot. I mean, there's residential mortgages, there's commercial mortgages, there's agricultural, raw land, farmland. I mean, there's a lot of different types of mortgages in the industry. And again, even just on the regular, I'm buying a house or a condo type of mortgage, there's over 5,000 different products. There's a lot.
And is there specific lenders for each specific, I guess, real estate asset category?
Yeah, there is. I mean, there's lenders that kind of typically lend in the we call it the single family residential space, so townhouse, house, condo, detached, et cetera. And then there's lenders that specialize in the commercial and the agriculture, farmland, raw land, et cetera. But yeah, there's lenders that really focus on certain niches within the industry.
And do you help with every aspect of the industry?
If it has the word mortgage in it, we do it.
Gary's your guy. So for people or first time home buyers, people looking to buy and get a mortgage, what would be some, I guess, tips for them in order to start this process? Take away those fears. I mean, just going back to fears. When I bought my first, investment property, mortgage is a scary word at first.
You're large.
Yeah. I'm just the little guy over here. But
It took us like 3 days to count all that cash you brought. For that down payment. No, I'm kidding.
what cash? But it definitely scary, and goes back to you need to pay off your mortgage. But I think for investment purposes, it's good debt at the end of the day,
is.
and you're not dumping all your money into your largest financial investment, and you could utilize your money elsewhere with a bunch of other investments.
Well, I just think it's the easiest way to have your money make money, to have it work for you, right?
Yep.
To refinance, re-leverage, or whatever it may be, and then go and buy something else, an investment property that's going to build appreciation. It's going to. I don't really, for me at least with investments, I don't really care if they're cash flow positive necessarily, because of the way appreciation is going right now. So if you buy an investment property and you're paying a few $100 a month out of pocket, it's okay.
Yeah,
I think it's worth taking.
I mean, I think it's just the bigger picture, right?
Yeah,
Spending
exactly.
a couple $100 a month to have a home that appreciates, 5-6% a year, and that home is worth $1 million. You're spending $2,500 to get 50-60,000 a year in appreciation. I mean, that's a no-brainer.
Yeah, exactly. So I
it is
think it's
scary.
smart money. It is scary. It is scary.
So as far as tips go, I mean, especially for people that are just really just, either they're newer to Canada or they're in a situation now where they're really considering getting their first home. It's pretty simple. Down payment, you have to have at least 5%. No one's giving you a mortgage for free. And high level, I would say calculate your income to what you qualify for at about 5 to 1. High level, right? And again, there's other rules with that.
Okay.
So if you have
5 to
a
1,
household
yep.
income of $80,000, typically you'll qualify for roughly $400,000 in mortgage money. Now, again, there's other rules that apply to that.
Right.
The big thing is that a lot of people call and ask and say, hey, well, I'm renting and I'm paying $3,000 a month in rent. I should be able to qualify for a mortgage where it's $3,000 a month.
Right.
Unfortunately, that's not the case.
Of course.
Right? So that's a big misconception in the industry. But again, down payment, minimum 5%, 5 to 1 your income, and that will give you an idea, right? Okay. So if you have $50,000 and you qualify for a $400,000 mortgage, high level, you shouldn't be shopping for homes that are $800,000.
Yeah, you should be shopping for homes that are
Right.
400,000.
Or speak, we could talk about other ways to help
Right.
you with co-signers or other strategies.
There are incentives for first-time home buyers.
There are.
Right? But before we segue into that, you brought up rents, and I don't know how true this is. So, this is your field of expertise. If I rent for 5 years, I'm considered a first-time home buyer again, or 7 years or something like that. Is
Yeah,
that correct?
so the way first-time home buyer works is as long as you've not owned a qualifying home in Canada in the last 5 years,
Yeah.
then you would still qualify as a first-time home buyer.
So if I sold and then rented for 5 years, I'd requalify.
Or even if you didn't rent, if you didn't own a home for the past 5 years, whether you
Yeah.
lived with someone or you rented or whatever,
You would still
then you would
qualify.
still qualify for a first-time home buyer.
So what would you say to a first-time home buyer who is under the thumb of a landlord paying $3,500 a month in rent with no money down? What would you say to that? Is there anything that they can do that might be helpful?
Well, I mean, look, it all depends on your living situation. I mean, if you could live with someone to start saving up some of that down payment, I mean, the down payment is a must. You have to have that down payment. There are, a few products available where you could borrow money against your lines of credit or credit cards. I'm not recommending it.
Right.
Just putting it out there that it does exist. I don't feel like borrowing money against high interest debt is the right move to get into a home.
No, of course
Because
not.
you're really putting yourself at a disadvantage. And it's also harder to qualify because now you have this other debt that has to be included in the equation. But there are ways to do that. So I would say really focus on saving the down payment. We did actually launch Canada's first co-equity product recently. We're the only ones in Canada that are doing it, where there is a company that can kind of help you with that delta. So the difference between the 5% to get you to 20. Again, bigger discussion maybe for another day.
Yeah.
But products like that are coming to the market where there's a need for these types for people like you
there's
just
a
mentioned,
huge
right?
need, huge
where
need.
it's like, hey, I don't have enough. I know I can make this work.
just don't
my
have
credit's good. I qualify based on the
We
debt
work.
service ratios. I just don't have that difference in down payment. So that's where typically you go to the bank of mom and dad, or potentially one of these co-equity programs that we just launched.
Right.
Trying to solve that problem and help Canadian families get into their first home.
That's huge. That's huge. And like you said, that might be a topic for another day. But if anybody does want to catch these topics and anybody does want to learn a little bit more, feels like you're the man to do it, there's a few ways to get a hold of you. There's a webinar that you're doing.
we do webinars. I mean, 812.mortgage is our website.
812
So the number
mortgages.
8, the word 12.mortgage.
We'll make sure it's
It's in our description.
it'll be here too.
Big blue letters.
Yeah.
The .mortgage is the ending. There's no .com or .ca after. We were the first company in North America, maybe the world, to adopt the .mortgage ending from day one.
Wow.
So that is the ending. So go on the website. We have a lot of great resources, calculators, contact requests. We have a big team. Currently at 812, everybody who works at 812 is a salaried employee. Unlike the industry where you have a lot of independent agents that do things different ways, we are there at our computers ready to help you in real time.
That's excellent.
So feel free to reach out. One of our senior mortgage strategists will contact you, and it'd be a pleasure to help everybody with, kind of give them that knowledge. And again, it's about the relationship. So even if
sure.
you can't buy today,
It is, totally.
let us give you the steps and the tools to kind of give you the path to get to home ownership.
No,
'Cause,
absolutely.
if you think about it, nothing would make us happier and more fulfilled than knowing that we were, kind of helping you to get into your first home. That's something that we can hold on to
I say
forever.
this
Yeah,
all
that's
the time.
amazing.
One of my favorite things about working with first-time home buyers is you're a part of that memory
Always.
forever, right? You're
Always.
building that experience. I
Always.
love that. I think
It's
that's
all about
wicked.
the
I've
experience.
had some, really great motivating conversations with families that I've helped get into their first home, and that's something you have for a lifetime.
Yeah, for sure. For sure. That's awesome. Gary, this is a new segment that I've just kind of made up on the spot. If there's anything you'd like to plug, anything you'd like to say, anything you feel is important that we haven't talked about, feel free.
Yeah, I mean, look, I think that, again, if I had to leave here today with one lasting memory for your listeners, it's that you really need to find someone you trust in the mortgage space. Go to a mortgage broker, build a relationship. The best rates don't always mean the best products. We get a lot of people call and say, well, what's your lowest rate? But it's actually going to cost them more to get into that product. I've dealt with some horror stories where clients, went with what they thought was the lowest rate at the bank, and there was a clause that they could never get out of that mortgage unless they refinance with that same bank or actually list their property on MLS, not sell it to a friend or family member. So there are a lot of pitfalls, right? Just like you would hire, one of the best lawyers if you were in trouble, or if you go to a top doctor if you really needed strong medical advice. It's no different, right? You're thinking about your biggest financial asset. Get in front of someone you trust, build a relationship, let them guide you and follow their lead. And that's the biggest thing that I'd like for all listeners to really focus on.
For sure. So essentially, anybody who's looking to get a mortgage, get a second opinion like you would from a doctor. 812 .mortgages.
Yeah.
Number 8, not the letters.
The number 8, the word 12 .mortgage.
Yeah.
And Gary Fooks and his team will take great care of you guys. I've known Gary a while. He's amazing. Great guy, awesome mentor, great leader.
Keep going.
I know he has a great team, and not just here, guys, nationally across Canada, like you said. So it's fantastic, guys. Take advantage of the opportunities out there, and really shop around before you make this huge investment. So I'd like to thank Gary for
thank you very
coming
much.
on
Pleasure.
today.
Appreciate it. I learned a lot. I learned a lot.
I definitely did as well. Did not know some things we discussed today, so that's amazing. But yeah, we'll provide all of Gary and his team's contact info in the description.
For sure. He's the 812 OG. We're definitely going to provide his contact info.
812 Mortgages.
And that's it. Episode 3.
Episode 3.